HP is kind of consistent with what's happening in the bigger picture at this point for the U.S. economy.
Yeah, another deal that kind of jumped on my screen here, Bloomin' Brands, the owner of Outback Steakhouse, they're thinking about maybe even selling themselves, going private. I know there's an activist investor in there, Jana Partners, so they're considering, quote, strategic options, including a sale. And that stock is up about 7.8%. So another deal.
Yeah, and if I'm not mistaken, this company was private before. Okay. And went public back in 2012. So it would be a return to private ownership potentially. I mean, who knows how that shakes out? You're talking about steakhouses and fish because they've also got Bonefish Grill and, Carrabba's Italian restaurant. Yep. So, we'll see how things unfold from there. But how many times have we seen activists kind of come in, push companies, and then things start to happen? And, certainly it's happening today for the shares of Bloomin' Brands at least.
There's a confluence of developments that are leading to all of these companies looking to go private, and I'm thinking also about Walgreens Boots Alliance that we're going to be speaking about coming up here. The idea that private equity firms have tons of dry powder, and there is a growing belief among executives that they can do more with respect to growth. They don't have those pesky shareholders looking over their shoulders, right? I mean, isn't that the main justification?
Well, that's a big piece of it. And then you look at how Walgreens shares have done. Of course, they had this transatlantic deal bringing together Walgreens with the Boots chain over in the UK and Europe. And, the stock's down something like 40%, even, with today's loss, I should say, even in part because of today's losses, but down close to 40% from its peak, which was 4 years ago. So, it's the classic case of CEOs, in this case, Stefano Pessina, who runs Walgreens Boots, figuring, okay, I'm undervalued in the stock market. Maybe I can take my company private, and, we'll see if that leads to higher value. I mean, hey, it worked for Michael Dell at Dell Technologies, right?
It certainly did. KKR back. It's great to see KKR out thinking about doing big deals. Not that they've ever left, but
and let's not forget KKR worked with Pessina back in the day. When they bought Boots, and then we were behind putting together the company with Walgreens. So there you go.
KKR back, leveraged buyouts. It sounds like the '80s again.
It sure does.
Well, let's hold off there. They haven't done it yet, and debt investors are pretty skeptical right now.
Exactly right. Just looking at the markets here again, kind of just treading water here. S&P literally flat, or some would say unched. The Dow.
No, they wouldn't. Not in this studio. They won't.
Not in this studio. And we have the Dow just down 5 points. This is Bloomberg. Right now, let's head down to our 99.1 studios in Washington, D.C. to Nathan Hager for world and national headlines. Nathan.
Paul, President Trump urged Republican voters to send a message in last night's elections. That message is coming from the Democrat in the Kentucky governor's race, Andy Beshear.
It's a message that says our elections don't have to be about right versus left. They are still about right versus wrong.
Beshear is declaring victory with fewer than 4,000 votes separating him and Republican incumbent Matt Bevin, who is not conceding this morning. White House counselor Kellyanne Conway says President Trump made that race competitive.
This was always going to be a tough race. The president won the vote in Kentucky, 62.5% of the vote in Kentucky when he ran. Nobody got even close to that yesterday, I think, in Kentucky, or nobody got that high in Kentucky.
Conway also says she does not think acting White House Chief of Staff Mick Mulvaney will testify in the House impeachment inquiry on Friday as requested. As she puts it, quote, "Why would we try to be complicit in an impeachment inquiry that we're not even sure what it's about," end quote. House leaders say Mulvaney may have been directly involved in pressuring Ukraine to conduct investigations into President Trump's political opponents by withholding aid. UK Prime Minister Boris Johnson's bid for re-election suffered another setback. One of his cabinet ministers, Welsh Secretary Alan Carnes, resigned this morning. He was accused of knowing about a former aide's role in a collapsed rape trial. Johnson is sounding unbowed.
I'm afraid that it is clear that if Parliament had its way, then this country would not be leaving even on January the 31st. And that, of course, is bad for democracy. It's disastrous for trust in politics.
Johnson spoke in front of number 10 Downing Street earlier today. This is the second resignation from his cabinet in the last week. Global news 24 hours a day on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
pickets.
From the business community, has it become normal?
Tariffs.
That is also below what the market is looking for.
Trade wars.
Give us an idea of how things are likely to evolve.
You don't want to turn away for a second. Don't worry, we're watching too.
Chief Asia economist joining us from our studios in Hong Kong.
Bloomberg Daybreak Asia.
Trade war got to be the top of mind there.
Tonight at 6 Eastern on Bloomberg Radio, the Bloomberg Business app, and BloombergRadio.com. Bloomberg, the world is listening.
Tom has been a teacher for over 40 years. One day, I think one of the students had asked the question and he didn't remember the answer. And I also noticed that he was letting his class out earlier than they were supposed to let out. I was really starting to worry.
Levi and I talked about how it would change our lives, but he was there beside me.
When something feels different, it could be Alzheimer's. Now is the time to talk. Visit alz.org/ourstories to learn more. A message from the Alzheimer's Association and the Ad Council.
In-depth analysis, concise reporting, need-to-know global business news. Around the world and across the markets, Bloomberg connects the dots for decision makers. Stay on top of today's headlines. Follow big breakthroughs in tech. Understand the latest political issues. See how the world's wealthiest are spending their money. Track what's happening in the markets, and much more. Subscribe today to Bloomberg, the global standard for business reporting. Get it all at Bloomberg.com/subscriptions.
Okay, kids, Dad's gonna teach you how to dance. First, spread your feet apart. Then, pump your knee, nod your head, shake your hips, and bite your lip ever so slightly. Now, with one hand in the air, point at people with the other hand. I call that the rock star.
Dance like a dad. It's a great way to make a moment with your kids.
Now, make a face like it just smells something bad.
Visit fatherhood.gov. Brought to you by the U.S. Department of Health and Human Services and the Ad Council.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and witness luscious scenery and calming waves. Fly from London Gatwick to St. Lucia with British Airways, with flights and 7 nights hotel from just £739 per person. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Cold Wednesday afternoons like this are cruel. You cough, you splutter, so does your car. Its battery dead, killed by an icy claw. Will anyone stand up to winter? Yes, you. Come to Halfords. We fit new batteries on the spot from just £15. And we're open late 7 days a week. See halfords.com for opening hours. Here in Chiswick. Ready for the cold snap? Ready for anything. Halfords. For life's journeys.
Batteries sold separately. Selected vehicles only in most stores.
I tell you what used to be fair, lunch. You used to walk past pubs and just see people laughing and merriment. What happened to those cheery days? I tell you what happened to them. It's been replaced by a pint glass sitting by a computer full of condiments, plastic cutlery, and a pair of chopsticks you use for fishing the noodles out your keyboard. It's just not fair.
At TalkTalk, fairness is important. That's why, unlike some other providers, we offer fixed price plans on our fibre broadband for the entire length of your contract. Search TalkTalk Fibre. Fairer broadband for everyone.
What if your email was organised by project and not by date? What if everyone looked at the same thing instead of their own inbox? Then it wouldn't be email at all. Forget your fragmented, jumbled inbox and make the change to channels in Slack. Spaces dedicated to individual projects, topics, or teams. All your communication is neatly organised and everyone is on the same page. Slack. Choose a better way to work. Get started at slack.com.
In cinemas, November 15.
So you're going to build a car to beat Ferrari?
With a Ford.
Correct.
Get ready for Le Mans 66.
I hate guys like us because we're different.
Starring Matt Damon and Christian Bale.
What are they doing? Making your car go faster. That's more like it!
Based on the incredible true story.
You got a plan? It's high risk.
Of Ford versus Ferrari.
No, I thought the whole point was to win the damned race.
Le Mans 66.
Hit it.
In cinemas and IMAX, November 15.
3 is a magic number.
300 schemes to help bugs and bees, supporting environmental needs. 8,000 grants for local sports, and performing arts get our support. 7 millionaires every week, the nation's on a winning streak. 30 million pounds to good causes every week. Who'd have thought it? These are magic numbers.
Your numbers make amazing happen. 25 years of the National Lottery.
Rules and procedures apply. Players must be 16 or over.
Hey, we know that Nature Valley nut butter cups are delicious anywhere. But why just sit in the kitchen eating them? When you could be here, chilling outside in the fresh air with a tasty treat. Oh, good boy! Whole grain oats with a delicious real nut butter filling. Nature Valley nut butter cups. Get out more.
And breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at TikTok on Twitter. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash. This on a day when equity index is kind of fluctuating right now at the start of the trading. Stocks did climb in Europe. We had a raft of mixed corporate earnings, also economic data, kind of muddying the outlook for global growth. Treasuries, a bit of a rebound there after dropping for 3 days. S&P 500 right now is a little changed, up right now about a point. We're at 3,076. The Dow Jones Industrial Average 7 points higher at 27,500. The Nasdaq Composite Index 21 points lower. That's down about 0.3%. Right now we're at 8,413. The benchmark 10-year yield in the U.S. 183. Just a bit of a bid to Treasuries, up 7/30 seconds in price. And NYMEX crude right now, that's up 46 cents a barrel at 57.69. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
There were local elections held throughout the day yesterday in the United States, and the net result was a series of setbacks for President Trump. That has been at least the headline message from a number of different outlets. Joining us to really get a sense of whether this is the actual case is Greg Valliere. He is AGF Investments Chief U.S. Policy Strategist. Greg, it's important. Markets are watching the election cycle very closely because some of the policies, particularly with respect to healthcare, would have major impact on entire swaths of equities. Do you believe that President Trump is in a worse position today than, say, a month ago, based on what we saw yesterday?
Unquestionably worse, Lisa. I think that it's not just yesterday's election results, which showed pretty good strength for the Democrats. It's a new poll this morning in the Washington Post that shows a dramatic drop by Trump among independents, women, suburbanites, key constituencies that he's going to have to get if he wants to win again in Michigan, Pennsylvania, and Wisconsin. A big poll and an important election.
So, Greg, we know that the polls are one thing, but the economy is another, and it's the economy, stupid, and the economy is still in pretty solid shape, certainly relative to many other parts of the world. How is that playing into your calculus?
Well, that's a big factor, obviously. I think Trump's biggest factors are an economy that has an unemployment rate below 4% and probably will for quite some time. And the other thing is that the Democrats aren't exactly a potent ticket right now. I mean, if it's either Biden or Elizabeth Warren, I think both of them have flaws that Trump will be able to exploit.
I'm wondering, how much do you trust the polls at this point?
I don't trust them specifically, but I trust the direction. I think that's the important thing. And there are some polls like Real Clear Politics, which is an aggregate of all polls. And I think it does show a real erosion of Trump's support among middle-class suburban women. And I think that's a very big deal. And that trend, to me, is unmistakable. I would make this point. For all the fear that you mentioned about, the Medicare for all, a lot of this stuff's going to die in the Senate. I'm not sure that the Warren agenda would make it if she got elected president.
So, Greg, one of the states or the elections yesterday was Kentucky for the governor race, and it's still too close to call, apparently, but it appears at this stage that the Republican governor will be upset by the Democratic candidate, and that's a state that President Trump carried pretty widely during the presidential election. What's your takeaway there?
Well, it's not just a repudiation of Trump, who was there on Monday urging voters to vote for this conservative governor and saying this was a referendum on impeachment. It's also a wake-up call maybe for Mitch McConnell of Kentucky, who faces perhaps a tough re-election fight.
What would you say to people who challenged your view, would say that the local elections that we saw yesterday were much more idiosyncratic in nature, not necessarily indicative of a blue wave in any way, and that President Trump still has a lot of support?
I could buy that on Kentucky because the governor is very controversial and not an easy guy to like. Virginia is more interesting, though. I think to see Virginia now solidly in the blue camp is a big deal, and I think that does have implications.
So we had the poll come out, which you referenced. We had the election results last night. Do you think this may embolden some Republicans who've been quite quiet in terms of criticizing President Trump? Do you think this might embolden some Republicans maybe step up their rhetoric?
It's a really crucial issue, and I do think some Republicans will be less enthusiastically supportive of Trump. They may stay quiet, but does this really affect the impeachment debate? I don't think so. Trump's going to get impeached by the House, and I still think he'll be acquitted by the Senate. I don't think it moves the needle.
We head towards the 2020 election, and we get into a more rigorous debate season for the Democrats. So politics will be rearing its ugly head for financial investors going forward.
Yeah, or the opposite. Interesting, healthcare stocks being the one major area people are watching to flip around based on any results.
Yes, and healthcare investors are certainly paying attention to those Democratic debates as Medicare for All gets discussed. This is Bloomberg Markets.
This is Bloomberg Market Minute. Stocks are little changed in today's session. The U.S. and China appear to be closing in on a partial trade deal, boosting prospects for global growth. This could be the largest leverage buyout in history. Bloomberg has learned that Walgreens is studying a potential deal to take the company private. The drugstore chain has held talks with private equity firms about a deal. A buyout would give Walgreens time to adapt to a fast-changing retail landscape out of the public eye. Xerox reportedly is considering a takeover offer for personal computer and printer maker HP. That's according to Dow Jones. HP has a market value of about $27 billion. The company is more than 3 times the size of Xerox. And social media influencing has become such a part of life for young Americans that an overwhelming majority say they are interested in getting paid to promote products on sites such as Instagram. No less than 86% of people ages 13 to 38 are willing to try out influencing, according to a survey from Morning Consult. Courtney Donahoe, Bloomberg Radio.
Imagine being fired because of who you love. Imagine being denied medical treatment because of who you marry. Imagine being evicted because of who you are. Millions of Americans don't have to imagine this. They have to live it. Because in 31 states, it's legal to discriminate against LGBT people. Get the facts at beyondido.org. Brought to you by the Gill Foundation and the Ad Council.
Join us in New York City on November 21st as Bloomberg Pursuits convenes the second annual The Year Ahead Luxury. Speakers include Jennifer Hyman, CEO Rent the Runway, Alessandro Bogliolo, CEO Tiffany & Company, Robert A.M. Stern, renowned architect. Supporting sponsor, Diamond Producers Association. Participating sponsor, St. Regis Hotels and Resorts. For more information, go to BloombergLive.com/TYA Luxury. Invitation code RADIO.
In-depth analysis.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and enjoy stunning white sand and crystal blue sea. Fly from London Gatwick to the Maldives with British Airways from £300 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Now is the time for a little kindness. It's easy to feel overwhelmed these days, and everyone deserves a time out. Head to austria.info/kindness to tell us about someone who should win a holiday to Austria's beautiful ski slopes. With a pinch of luck, they'll be enjoying the snow, sun, and serenity of a winter paradise in no time. Visit austria.info/kindness now.
Hey, we know that Nature Valley nut butter cups are delicious anywhere. But why just sit in the kitchen eating them? When you could be here, chilling outside in the fresh air with a tasty treat. Oh, good lord! Whole grain oats with a delicious real nut butter filling. Nature Valley nut butter cups. Get out more.
Stuck in traffic during the big game? With TuneIn Premium, you can listen to your favorite NFL team on the go. No TV required. Even during rush hour, you won't miss a single touchdown. Listen to the NFL on TuneIn Premium today.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
This is not a commercial. This is a reminder. With TuneIn Premium, you could be listening to more music commercial-free. Get over 45 commercial-free music stations. Visit TuneIn.com/premium to upgrade.
In the stock market and in life, everything can change from one minute to the next. Be the first to hear the latest money news and market trends with CNBC on TuneIn. Wherever your day takes you, listen to CNBC's full slate of programming, including shows like Fast Money, Squawk Box, and Mad Money with Jim Cramer. And when the next big business story breaks, CNBC lets you know with live updates and commentary. At the office, at home, or on the go. Search CNBC on TuneIn to listen.
broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Markets.
Coming up, the lockup period post-IPO for Uber has ended, and people are selling their shares a lot. We are going to take a look at the losses, which currently exceed more than 3% in heavy trading volume. Plus, we're going to take a look at how to move forward from here. There seems to be a happier tone to markets. How long will that persist? Right now, though, let's just get some numbers with John Tucker. John.
And Lisa, we're swimming in it. Oil, that is. Crude oil inventories rose 7.93 million barrels, according to the Energy Information Agency. That has crude oil right now, Brent at least, the international benchmark down about 20 cents, 62 to 77 right now. Now, as far as stocks, the S&P 500, it is little change early in the session. Gains in financials and healthcare, offsetting declines in tech and energy shares. HP rising after the Wall Street Journal reported Xerox considering a cash stock offer for the PC maker. And somebody's not doing their share. Worker productivity is down. Vinny Del Giudice has that story.
Productivity, a measure of business efficiency, declined for the first time in almost 4 years. It fell at a 0.3% pace in the third quarter as economic growth moderated and labor costs edged higher. The government data cast doubt on the long-term impact of White House tax cuts aimed in part at boosting business output. Vinny Del Giudice, Bloomberg Radio.
And Chinese state-owned entities in talks about investing a combined $5 billion to $10 billion in Aramco's initial public offering. S&P 500 down about a point. The Dow down 20 points at 27,471. The Nasdaq 33 points lower at 8,401. We check the markets every 15 minutes during the trading day right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
Bloomberg Opinion, informed perspectives, and expert data-driven commentary on breaking news.
Let's talk a little bit about Uber. Some of the numbers here. The stock is trading at $27 a share right now. Remember, the IPO price was $45. The stock is down 3.3% right now. But the big number that jumps out at me today is the volume. Almost 80 million shares have traded. That's due to the lockup expiring today, so a lot of insiders selling. To get the latest, we welcome Shira Ovide. She's a Bloomberg opinion columnist joining us here in our Bloomberg Interactive Broker Studio. So, wow, what do you make of this Uber story today? It seems like every day there's something new, and today's a big one.
It's true. I'm wincing a little bit as we talk about this. Look, I think people knew this was going to happen. This was a date that I had circled on my calendar, so to speak, my digital calendar.
With the proverbial circle.
Yeah, with the proverbial circle. Because we knew for months that this was the day that hundreds of millions of additional shares in Uber were going to be free to sell. And now it looks like some of that selling is happening. The thing we don't know, of course, is who is selling, right? So is this employees who have been waiting in some cases for years to have an ability to turn their stock into cash? Are these the early investors, SoftBank or Benchmark, one of the venture capital backers of Uber? I don't think we're really going to know who is selling, but that to me is even more interesting than the volume.
What's wrong with Uber?
Well, I think the issue for Uber, and this has been true for a long time, is the basic economic model of the company is controversial, that this could be...
Wait, is that basically another way of you saying absolutely everything? That its fundamental economic model?
Yeah, its fundamental economic model may or may not work. So if you're an optimist, you can look at Uber and say, this is, a bet on the transformation of transportation and consumer behavior and the reshaping of cities and how people and goods move around the world. If you're a pessimist, you can look at this and say, this is a money sink. It'll never be as big as the optimists believe. It may never be as profitable as the company believes. It may never work at all.
So, Shira, you wrote a great column a couple of days ago on Uber. I like the title here, the headline, Uber puts the brakes on growth at any cost. Do you think they are trying to pivot and saying we're focusing on cost, we're focusing on profitability? That's kind of what we thought the market wanted. Do you think that's a good strategy for them?
I feel like they don't have a choice, but you're right. I think I posted this on the day of the earnings call that the CEO sort of started out on the earnings call basically talking about the changes they had made to the underlying economics of the business, basically trying to kind of squeeze more money from every ride or every restaurant food delivery, basically talking about how we care about making this profitable and not just growing as fast as we can. And that is just a remarkable change in strategy for this company and for lots of companies like Uber in really 6 months. I mean, 6 months ago, this was all about how big can Uber get and how fast. And now it's about, sure, we want to grow, we want to be big and get bigger, but we have to do it in a sustainable way. It's really stunning.
And this is directly from investors who used to say, we want growth at any cost, and now are saying, please don't do that, please make money. I mean, that's essentially what's going on. But in fairness to Uber, it seems like they do have a business model that is filling a role and is disrupting certain markets. My question is more about some of the segments it's expanded into, in particular Uber Eats. And we did get some information about that in their earnings release. And we got some from Grubhub the week before. Not great.
Yeah, not great. I mean, I think both Uber and Grubhub talked about unsustainable competition, and I think both Grubhub and Uber pointed the finger at unnamed private companies in their space, and that's in the United States, that's companies like DoorDash and Postmates, which are in that kind of grow at any cost kind of phase. And so Uber and Grubhub were basically suggesting that those companies were offering discounts to diners or unsustainably low delivery fees, basically saying that those competitors were making food delivery an uneconomic business.
Well, it's interesting just to point out, Lyft is up 2.8% today to $42. That's the good news. The bad news is they IPO'd at 75 or something like that, so they're still below the IPO price. But it'll be interesting to see if investors kind of decouple or unlink these two names and try to pick a winner.
Yeah, I agree with you. I've certainly heard the theory that people would rotate out of Uber and into Lyft, where, look, I think, again, when these companies went public, it was clear that Lyft was, again, not a profitable company. Those economics may also not work, but certainly it was a little bit easier to see Lyft as the sort of slightly more conservative investment, a company that's mostly focused on North America, on the U.S. and Canada, where prices are higher, the fare wars are maybe less aggressive than they might be in a growth market like India, for example. And Uber is sort of the bigger, bolder, but more outlandish kind of investment. So I think there has been some theory that people might shift from Uber into Lyft. You do see, at least on a multiple basis, that Uber's multiple is higher, indicating that their ceiling is higher.
Shira Ovide, thank you so much for joining us and getting us that perspective. Shira Ovide is a Bloomberg opinion columnist. Read all of her columns. They're fabulous on the terminal or online. Right now, let's head to our 1991 studios in Washington, D.C. Nathan Hager with world and national headlines. Nathan.
Lisa, the number 3 official at the State Department has arrived on Capitol Hill to testify in the House impeachment inquiry. David Hale is the first official to buck the official White House policy not to cooperate with this probe. A policy White House counselor Kellyanne Conway says acting Chief of Staff Mick Mulvaney will uphold on Friday.
Somehow we want to march people up to Congress where they're growing mushrooms in the dark in the basement, in Schiff's basement chamber, and we want that to prevail over what the Ukrainian president and what the American president have said.
Meantime, as the impeachment inquiry continues, lawmakers are trying to avoid a government shutdown later this month. Bloomberg's Amy Morris has a budget progress report.
The White House says it looks like the next stopgap funding measure will carry the federal government into December. Senate Appropriations Vice Chairman Patrick Leahy says lawmakers should move ahead on talks regardless of the White House position, saying that the president can sign it or not. Senate Appropriations Chairman Richard Shelby has said he thinks a stopgap would realistically have to run longer than December. The current stopgap measure runs out November 21st. In Washington, I'm Amy Morris, Bloomberg Radio.
An arrest has been reported in the suspected drug cartel ambush that left 9 breakaway Mormon family members dead in northern Mexico. Authorities in Sonora State announced that arrest on Facebook as family members of the 3 women and 6 children grieve.
None of my grandchildren made it out. It burnt to a crisp. And my daughter-in-law
and they're about as innocent as they come.
Mexican President Andres Manuel Lopez Obrador turned down an offer from President Trump to, quote, wage war on the cartels. Global news on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Startups and research universities like New Jersey Institute of Technology are fueling the innovation economy. And few people are better positioned to see what's on the horizon in New Jersey than physicist and state representative Andrew Zwicker.
How technology is transforming our financial sector is revolutionary, and so much of that is in New Jersey. We are innovators when it comes to agriculture, and there is opportunity now for great transformation in how are we going to grow food in an ever-growing population, and how do we turn urban centers into agricultural centers. Autonomous vehicles is another one where we have some of the world's leading experts, and how this will transform how those who are either elderly or are visually impaired or mobily impaired can start to use autonomous vehicles to transform their lives and have access to transportation they could have never had before.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu/research.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their businesses strategically, yet the most competitive managers in the market know with the right partner and a flexible operating system, you can. Go boldly toward change with SEI Investment Manager Services.
Determination and operational strength are both essential factors for growth in asset management. I'm Steve Meyer, President and Head of SEI's Investment Manager Services Division. We know that disruptive forces create opportunities around the world. If you see potential in change, our industry specialists will maximize SEI's integrated platform of data and risk management, global investment operations, compliance support, and investor services to position your asset management business for success. Come grow with us.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
At Argos, get them the toys they're dreaming of this Christmas. Save 20% when you spend £20 or more on toys with code TOYS20, including top brands like Peppa Pig and Lego. Enjoy same-day home delivery 7 days a week. With Argos, you're good to go. Offer ends the 12th of November, subject to availability. Exclusions apply. Delivery conditions apply. Order by 6 p.m, 90% UK coverage.
Hi, it's Lisa and Ryan from Marcham Stores. Have you heard the Lotto jackpot is over £12 million?
And it must be won tonight.
Or thousands of you get a share of the jackpot.
Hey!
Lotto, celebrating 25 years of the National Lottery. Your numbers make amazing happen. Estimated jackpot. Rules and procedures apply. Players must be 16 or over.
O Romeo, Romeo, wherefore art thou Romeo? Deny thy father and come to the shops with me. We can get 10% off 2 big shops a month with the new Tesco Club Card Plus. Oh, and 10% off your favourite Tesco brands, including F&F in-store every day. All for $7.99 a month.
New Tesco Club Card Plus. Value you can't stop talking about. Subscribe online from the 8th of November. £200 max spend per shop. In-store spend only. Club Card app required. Exclusions apply. See online for details.
What if you could keep up with cable news even when you're on the go? With TuneIn Premium, you can listen to MSNBC live without any commercial interruptions. All of the news, none of the ads. Listen live on TuneIn Premium today.
Pulled into the end zone, and he's yanked in by a lineman for the touchdown.
NFL fans, hear every live game on TuneIn Premium.
Seahawks win! Touchdown!
This Thursday, hear the home and away call as the 4-5 Los Angeles Chargers visit the 4-4 Oakland Raiders at 8:20 p.m. Eastern.
15-10, 5, touchdown, Denver!
At home or on the go, hear the home and away call of every NFL game this season on TuneIn Premium. Upgrade today.
ESPN Radio and TuneIn just go hand in hand. Hi, this is Mel Kiper Jr. reminding you that all of your favorite ESPN Radio shows and events are right here on TuneIn. Just search ESPN Radio to begin enjoying it today.
Far wing elevates, triple bucket.
The war of the crowd. The shot clock ticks down. Will the ball go in? The suspense is pure torture, but you wouldn't miss this for the world. And the replays just don't cut it.
The sideline, the Van Fleet for three.
TuneIn Premium brings you every minute of the NBA season streaming live, so you can be there when it matters most. Hear it now, hear it live on TuneIn.
Pump fake in the lane, turnaround jumper from 8 feet is good on the
Search
right block.
NBA today to start listening.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Some days life can get in the way of catching up on the news that moves your world. TuneIn is here to help. With live 24/7 coverage from CNN wherever you go on the TuneIn app, you can always find a slice of your schedule, however long, to check in on the biggest stories of the day.
Hell hath no fury. The president's counselor went on a rampage on a taped phone call with Washington Examiner reporter.
Search CNN on TuneIn to get the live news when it matters most.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and TikTok on Twitter. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with his Bloomberg Business Flash on a day when there's not a great deal of movement in the major averages. The S&P 500 now is unchanged, 3,074. The index has gains in financials and healthcare. That's offsetting some of the declines that we're seeing in energy shares and technology. And then you have individual stocks like HP. That's rising after a report that Xerox is considering a cash stock offer. And Uber, that continues to sink for the 5th straight day after the lockup of the share lockup expired today. Right now, the Dow Jones Industrial Average 9 points lower. That's at 27,482. The Nasdaq Composite Index 29 points lower. That's down 0.4% at 8405. And we're looking at the 10-year right now. The yield on the benchmark 183. The price is up by 730 seconds. And NYMEX crude 13 cents higher right now, 57.32 a barrel. We check the markets for you every 15 minutes during the trading day right here on Bloomberg Radio. That's your Bloomberg Business Flash.
This is Bloomberg Markets with Lisa Abramowitz and Paul Sweeney on Bloomberg Radio.
When we've been talking about markets recently, we've been very macro-focused, in particular focusing on trade. But a number of big deals are turning the focus increasingly on the micro. I want to talk a little bit about the Walgreens Boots Alliance potential bid to go private, which probably won't happen if the appetite from debt investors is any indication. But I'm curious what this says right now about public markets. Jim Paulson, Luthold Whedon Capital Management Chief Investment Strategist, joining us now. What's your view on this, Jim? I mean, the idea that such a big company with so much debt would want to go private at this point, what does that say to you?
Well, I think a couple things, Lisa. I think it's a good point that you raise. I think that the environment we've been in, really, in this entire expansion, has been one of extremely high liquidity introduced by policy officials and extremely low interest rates. And if you think about it, the whole reason to be public to begin with is access to capital. And capital is really so readily available, has been made so readily available in this recovery that I can see why we've had just an incredible number of companies go private, remain private longer. Finance is relatively cheap and readily available. And on top of that, at the start of the last recovery in 2008 and the crisis that happened, there was just a ton of regulations piled on to public companies, many of which have been lifted, but many of which still remain. So if you look at the environment we're in with a over-regulatory-minded sort of environment in the last decade, and then with ample liquidity, great access to capital, and very low interest rates, it's hard to see why you need to be public. And in many ways, you can do a lot more without the scrutiny that's required of a public company. And I just think until those conditions change, we're going to see a continued reduction in public companies.
Hey, Jim, another story that Lisa and I are following is kind of related is Uber Technologies. The insiders are now able to sell some stock. The stock's trading off. It's well below its IPO price. And for a lot of investors, the Uber, the Lyft, the pulling of the WeWork deal has really highlighted what some people are concerned about might be a bubble in private market valuations, and that when you come to the public market, that's when you really get price discovery. Do you feel like there's been maybe it's just limited to technology, but maybe some bubbles in some of the private markets?
I think it's true. I think privacy in general, to me, is bubblicious, if you will, or has the potential to be that way. There's a lot of private investments being done in portfolios, and a lot of private companies that have waited longer to come public. I think that's a lot of it. I think mostly earlier days you'd come public much sooner because you needed capital. When they just said you don't need it, they wait longer, in which case you're into a more mature phase of these companies when they do become public, which I think creates more price risk for them initially. They're less of that just supercharged growth company when they come public as compared to most of them. I think that's some of it overall. I think some of it too is just does reflect a bit of who knows where these private values are. You wonder if we put all the companies that went private over the last 10 to 15 years back into the public market today, what would the overall valuation of equities be today? We might find we're as high as we were at the dot-com top, for all we know. Problem is we've got this huge equity market that is non-disclosed on a lot of fronts. One of them, valuations. The value they're placed at is just what somebody in the corporate C-suite says they're worth. And so I do think that we're seeing some public or coming public failures out the gate does reflect that we've got privates maybe being held on balance sheets too highly valued.
So bubbles, too much liquidity. This all sounds bearish, or at least is being cast in a bearish light. Yet you've won if you've bet with this liquidity wave. So where do you stand on that?
I'm still bullishly inclined here. I think the key thing is not the trade war or what the Fed's doing. I think the key thing is we've had a slowdown in the last year in the global recovery, and we've responded to that with massive policy stimulus. Not just the Fed and the ECB, but the tremendous halving of long-term interest rates across the globe by bond vigilantes, a big surge in money supply growth rates across the globe, a greater fiscal stimulus being brought in this country as well as others. And the lagged response to that, it takes about a year for that stuff to work, I think, as it's starting to show signs of picking up this recovery one more time. And if the recovery picks up, if we get an ISM number one of these months that goes back above 50, Lisa, then I just think there's so many portfolios far too defensively positioned, far too bearishly positioned, and already part of the rally in this market is bearish investors that are reducing their bearish bets just a little bit at the margin. And if we continue to get data of a reacceleration again, not only here but globally, we got great news out of Europe suggesting at a minimum it's not headed for recession, for example, then I think this market still has legs. We're slightly over the average trailing PE multiple of the last 30 years. So there's still some valuation room. There's a hugely supportive policy environment, and there's a lot of underallocated portfolios.
So, Jim, is it time to unwind my utilities and REITs and consumer durables and maybe get into some industrials and some more riskier asset classes?
I think so, Paul. Last few weeks here, there's been just a tremendous underperformance by S&P low vol index, which is probably one of the most preferred indices this year. And it's not only so much the cyclicals and small caps and international markets are picking up performance, it's the underperformance of the defensive assets look at the underperformance of the stuff that you'd buy to sleep well at night. Look at what bonds have done of late. Look at what gold has done of late. Look at what low vol or dividend aristocrats or utilities or staples have done. And I think there could be, maybe all this is a little ahead of itself near term, but I think over the next few months we're going to continue to see defensive stocks underperform and more cyclicals, small caps, and international stocks outperform.
Jim Leuthold, thank you so much. Jim Paulson from Leuthold Whedon Capital Management, Chief Investment Strategist. Jim, thanks so much for joining us. We appreciate your thoughts here. Again, maybe kind of a cycling out of some of those more defensive sectors into some of the more cyclical ones, assuming that the economic activity picks up a little bit. We know the consumer's strong. There's definitely some weakness on the manufacturing side, but to the extent, we got some good manufacturing number out of Europe. So the expectation is if we do get a little bit of stability there, maybe there could be another leg up, given the fact that we have very accommodative central bankers around the world supporting the economy as best they can. We're certainly seeing that with the ECB and with the U.S. Federal Reserve. Looking at the markets right now, the Dow is down 12, S&P down 1, NASDAQ down 34. This is Bloomberg Markets.
It's another Wednesday afternoon, yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick. Experience Mexican culture and relax by the Caribbean Sea. Fly from London Gatwick to Cancun with British Airways from £275 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
The nights have started to draw in, and at DFS we know that can only mean one thing. Everyone's spending more time at home getting nice and cozy. You can't beat it. That's why our autumn-winter collection sofas are handmade to order for complete comfort, and many are guaranteed to be delivered in time for Christmas. So make sure you come home to a sofa that's perfect for you. DFS.
Whether you're waiting for a train or a takeaway, with Tesco Mobile you don't have to wait for a brilliant deal. Our best ever Black Friday event is on. This week you can get a Samsung Galaxy A50 for just $17.49 a month. That's our lowest ever price. Get yours by the 10th of November. Tesco Mobile. Every little helps.
Best ever Black Friday based on range of products in promotion was £18.99, now £17.49. 36-month credit agreement, rolling monthly usage agreement, subject to status, phase policy applies. See tescomobile.com/terms.
Hi, this is Brian Weber, host of NFL First and Goal every Sunday, kicking off at 1 Eastern only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours.
Petrol, cashback, sat-nav, cashback, food shop, rucksack, aubergine and pasta, white wine, cashback, treadmill, cashback, flowers for the family, dressing gowns, cup of tea and movie night, cashback, chopping board, cashback, parmigiano, reggiano, cashback. Anything you want to buy, everywhere you want to go. Guess what? Cashback. Whatever you spend your money on, get money back every time with the American Express Platinum Cashback Everyday Credit Card. Search Amex Cashback. Representative 22.9% APR variable. Minimum annual spend to receive cashback. Terms apply. 18 plus subject to approval.
It's troubles, and these guys are having to do some resets around their expectations around growth and so forth. But then you also have to take in the longer term. We can go back and point out many stocks that went through dips and particularly around their lockup, where the fundamental value of the business was still there, and there was a long-term value proposition that was worth a lot more than what the stock was worth at the point that the lockup came off. So that's what's hard about being a public market investor in these kind of things, is which way do you bet? Where do you see this go?
Mike, I mean, the comments, the comparison to Amazon, but also the comments that the market's betting against us, and I'm fine with that. You think that's, I guess, a shared philosophy among some of these big disruptors, whether it's Uber or some of these other newly public so-called tech unicorns, to think about it that way, given the share price sell-offs we've been seeing?
I have to say, my favorite thing in that clip we just watched was just scurrying away from a WeWork comparison as fast as possible. Yes. And I feel like every unicorn out there right now just wants to be like, this is why we're not WeWork, and here's 4 different reasons why we're not completely insane. And look, I don't think Uber is a WeWork, but I also don't think any of the unicorns out there were ready for this type of market, right? I mean, even back when, if you can remember earlier this year, I think before, Uber was making the rounds to go public and pitching itself, $100 billion to them as a valuation, $120 billion didn't sound crazy. And now they've had to radically adjust their expectations, radically adjust what the market's willing to stomach in terms of losses and when they want profitability. And I actually really agree with Dara, what he said, which is that investors value something differently now. And the world is kind of crazy right now and unpredictable. And when that happens, you're not going to go in on high growth stocks or high growth companies that burn money at insane rates. So I don't think they're ready, or I don't think they like the environment. I think he's probably overstating it there, but they've had to shift pretty quickly.
Guys, we're not done talking about it by a long shot, but appreciate the touch today. We'll see you soon. Paul Holland and Mike Isaac.
Thanks for having me.
Up next, 5G and China in focus ahead of Qualcomm earnings after the bell today. John will break down what to expect in an important quarter for Qualcomm on the other side of this break. Shares are down slightly, but we're back in 2 minutes.
Consistency can deliver on investment goals. Columbia Threadneedle Investments.
My reputation was trashed online. I felt completely helpless. My entire career and business were in jeopardy. I called Reputation Defender.
Take control of your online reputation. Get your free reputation report card at reputationdefender.com. Find out your online reputation today and let the experts help you repair it.
They were able to restore my good name.
Visit reputationdefender.com or call 1-877-866-8555.
We're getting pushback on the Turner project.
The Turner project is being pushed back.
We're turning our backs on the project.
Oh, we're backing projects at every turn.
Huh?
Get everyone on the same page with Smartsheet.
Understand, all these leaks about the trade talks are coming from the Chinese side. For some reason, the U.S. media treats China as somehow more credible than our own government. Even if you hate Trump, it's pretty crazy to treat the Chinese Communist Party as a credible source.
It's time to change the way you think about money. Personal stories, money tips, strategies for saving and investing. Invest in you. Ready, set, grow. CNBC and Acorns. Go to cnbc.com/investinyou.
These folks, they don't have time to go to the post office. They have businesses to grow, customers to care for, lives to get home to. They use Stamps.com. Print discounted postage for any letter, any package, anytime, right from your computer. All the amazing services of the post office, only cheaper. Get our special TV offer, a 4-week trial plus postage and a digital scale. Go to stamps.com/try and never go to the post office again.
At Credible.com, we've helped tens of thousands of people save money by refinancing their student loans. In 3 minutes, we'll get you actual rates from multiple lenders. We could save you hundreds of dollars a month.
Visit Credible.com to see how much you could save.
I got things I want to do, but student loans were holding me back. Credible.com helped me save $600 a month with a great rate. Now I can go do what I want to do.
Visit Credible.com to see how much you could save on your student loans.
Welcome back to Squawk Alley. A big earnings report for Qualcomm coming after the bell today, with the street mixed on the stock. 52% of analysts have a hold on the name, and John Ford is out in San Diego at Qualcomm headquarters with a preview of what to expect later this afternoon. John.
Yeah, Morgan, the stock's been on an interesting run over the past few months. Of course, over the past couple of years, it's been through a gauntlet of, whether you're talking about Broadcom and the attempted takeover there, the legal fight with Apple, the U.S. government, among others, on and on and on. What we're expecting, what analysts are expecting from this quarter, around 71 cents in EPS, 4.71 billion in revenue. This is a company that tends, over the past couple years, 100% of the time, to meet or exceed on EPS. Last quarter, there was an issue around anticipation of 5G, seeing a particular slowdown in China ahead of 5G. Some OEMs, customers saying, well, maybe we're not going to be as aggressive about this year's launches because we're going to invest in next year's 5G launches. But then at the same time, Qualcomm was able to settle this beef with Apple, and now we see Apple and the iPhone doing better than many expected. That should have an impact on Qualcomm, particularly, I would expect, on the EPS side. How big an impact? Well, we'll see, but those are a couple of the things that I'll be looking for in these earnings, talking to Steve Mollenkopf about as well, guys.
Hey, John, just really broadly, Microchip last night talked about sort of calling a false bottom in the quarter and saying, I think the quote was, if you're confused on what's happening in semis, join the party. Are we having to rethink this all over again?
I think in a way we are, but Qualcomm in particular hews very closely to the smartphone market, and there's some unique dynamics in that overall. China has been tending to have an impact just how the consumer is behaving there, what OEMs are doing, again, ahead of that 5G launch. And then this Apple factor. It hasn't been that long that Apple has again been a part of the Qualcomm earnings picture. So, they're having this big phone launch. I wonder exactly how that's going to affect these numbers kind of now that is worked out between them, and how the guidance will look because of that, because Qualcomm's got some sense of what they expect post-holiday. Certainly, how are those numbers going to look as we start looking into 2020, and what the demand picture will look like as we head into the 5G ramp season, which frankly will pick up more as we head into 2020, Carl.
Yeah. John's excellent adventure continues. West Coast from San Francisco to L.A., now San Diego, bringing you a view of tech from the West Coast. It's been great, John. Get back here soon. We'll talk to you in a bit. When we come back, Andrew's exclusive with Brian of Airbnb, live from DealBook. Don't go away.
Attention! Do you have Medicare? Could you use more benefits? Lower out-of-pocket costs?
It's another Wednesday afternoon. Yet another cold day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March. At Argos, get them the toys they're dreaming of this Christmas. Save 20% when you spend £20 or more on toys with code TOYS20, including top brands like Peppa Pig and Lego. Enjoy same-day home delivery 7 days a week. With Argos, you're good to go. Offer ends the 12th of November, subject to availability. Exclusions apply. Delivery conditions apply. Order by 6 p.m. 90% UK coverage.
Next time you look up at the stars, think about this.
Inside you are the remains of a stellar explosion. You are made of stardust. And without the stars, there wouldn't be us.
I'm Guy Raz, the wonders of the universe and the people who still look up every night. Next time on the TED Radio Hour from NPR. You can subscribe to the TED Radio Hour on TuneIn.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
Hi, this is Brian Weber, host of NFL First and Goal, every Sunday, kicking off at 1 Eastern, only on TuneIn Premium. Be sure to listen this Sunday for the ultimate football fan experience, featuring 7 hours of commercial-free coverage of every scoring play around the NFL.
Pascal gobbles up the rebound and slams it down.
Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
There has been evidence that if you deploy a lot of capital in the consumer space, you can leave your competitors behind, and over time, you will turn that business more profitable as you grow. Hasn't worked out in every industry. Hasn't worked out in ride-hailing, for example, around the world. Hasn't worked out in, I guess, in the take long-term leases up front and then make money on a day-by-day basis business. Money in the right hands, right founders, right potential long-term platforms works, but it doesn't work willy-nilly on every pet walking and hotel room renting website.
That was former SoftBank exec and current Palo Alto Network CEO Nikesh Arora throwing a little shade at his former firm's investment strategy, sitting down with John last week from CNBC's Tech Executive Council Summit. SoftBank reporting a $9 billion hit this quarter due to its investments in Uber, WeWork, Slack, and others. Deirdre Bosa has more on those results from San Francisco. Deirdre.
Morgan Masa-san sounding humbled, but still defiant. He admitted that his investment judgment has been poor, calling out Uber and WeWork and saying that he misjudged Adam Neumann.
I overestimated Adam's good side, which I should have known better and more. And his negative side, in many cases, I turned blind-eyed, especially when it comes to governance.
Now, he also said that SoftBank has experience with difficult turnarounds, though one of its most high-profile, Sprint, was recently called an unmitigated disaster by Wall Street analysts. Now, Masa-san touted gains from other investments like Slack and Guardant Health, and he promised no more rescues for Vision Fund portfolio companies. Yet, when asked if there could be other potential WeWorks in the Vision Fund universe, Masa said this.
Is there any other similar concern? In fact, yes, there is. Like a dog walking company and other portfolio companies, we may see similar problems surfacing.
Now, he's referring to WAG, the dog walking app that is reportedly up for sale, but questions are also swirling about the valuations and losses of other Vision Fund-backed unicorns like car leasing startup Fair and Chinese ride-sharing giant Didi, just as Uber, another big SoftBank bet, continues to flounder as a public company. Now, the hit to SoftBank's bottom line and Masa-san's reputation as a VC investor, that comes at a critical time, just as he's trying to raise a second $100 billion Vision Fund. Now, he provided a few details on it this morning, but he said that it was on track, and they put a greater focus on corporate governance. Probably the least they can do, guys. Back over to you.
Yeah, some remarkable candor out of Masa-san.
Yeah.
Quite a story, Deirdre. Thank you. European markets are closing right about now. Seema Modi's got a breakdown of today's action overseas. Hey, Seema.
Hey, Carl. Following 2 days of gains, sort of a mixed session in Europe and for the broader indices. That comes after the IMF cut its 2019 forecast again, now projecting growth of just 1.2%. And we did get some encouraging signs in Germany. Take a look at this, produced by our market producer, J.R. Reed. It shows you that data in Germany for factory orders saw an unexpected pickup in factory orders in the month of September. But economists are really pointing to the longer-term picture at play, which shows that on a year-over-year basis, manufacturing orders are still more than 5% lower than they were in September of 2018. And that's primarily due to softening demand from China. Let's pivot, though, to earnings. One big mover that we're watching today is Adidas, seeing sales rise 6%. However, operating profit came in flat. And remember, rival Nike has been growing faster in both China and Europe over the past year, but Adidas has been trying to reassert itself here in the U.S. What's interesting is if you take a look at a year-to-date chart, Adidas is vastly outperforming Nike shares, up 47%. In fact, the best performing stock in Germany so far this year. Morgan, sending it back to you.
Seema Modi, thank you. It is time now for a news update. Sue Herrera has that for us back at HQ.
I do indeed. Thanks, Morgan. Here's what's happening at this hour, everyone. The State Department's third-ranking official arriving on Capitol Hill for his closed-door testimony in the impeachment inquiry. David Hale is expected to say that Secretary of State Mike Pompeo determined that defending Ambassador Marie Yovanovitch would hurt the effort to free up U.S. military assistance to Ukraine. Turkish President Erdogan telling an audience at Ankara University that Turkish troops have captured the wife of Abu Bakr al-Baghdadi. Earlier this week, Turkey said it had captured Baghdadi's sister, her husband, and daughter. I'm going to send it back downtown to you, Carl.
All right, Sue, let's get to Brian Chesky at DealBook.
Northern California at an Airbnb. There was a house party there. I know that you have probably not slept these last 5 days. Yes. Thinking about how you wanted to change the company fundamentally. And I just got a draft of what is going on here. So why don't you just tell everybody, A, what the past 5 days has been like, and B, what you've decided to do about it.
Yeah, so there was a tragedy on Halloween night. Somebody threw an unauthorized house party. House party got beyond out of hand. That would be an understatement. Somebody brought a gun. There was an altercation. It was a mass shooting, and 5 people were killed. It was a huge tragedy. In the wake of this, let me back up for a second. So Airbnb is founded really on the premise of trust. When we started Airbnb, I remember telling people about the idea, and people said, "You're crazy." And I said, "Why am I crazy?" They said, "Strangers will never trust one another to stay in homes." And over the course of the last 10 years, I think what we created, what we invented, wasn't really a way to book a home. I think what we invented was a way for strangers to trust one another to stay in homes. And for the most part, it's reinforced this basic belief that we've had, maybe naive, that people are fundamentally good. And statistically speaking, it's true. About 2 million people a night stay in Airbnbs, and most without incident. But, very often there are moments in your company's history, and there was a moment in our past that defined us, and this is another one of those moments where a tragedy happens and we say enough is enough, we galvanize, and we are making the most significant change to our platform to increase the amount of trust in our platform. And so we're rolling out 4 different things. The first thing we're going to do is have 100% verified. We will make sure that 100% of hosts and 100% of listings will be reviewed by the end of next year, with the intention of having 100% of the things on Airbnb being verified.
When you say verified, you mean verified by the company, not by a star system of users?
It will be essentially a combination of the company and the community. So we're going to use technology, we're going to use guests, we're going to basically get a confidence score, but we're going to make sure that we can stand behind every single listing, every single host, to make sure that every single listing is accurate, the information's accurate, the photos are what you say they are, the addresses are accurate, they meet minimum standards, they meet basic safety protocol, and the host is who they say they are, and you know who what that identity is. We think this is a really, really critical step for our industry, because I think ultimately the internet really can only function on a premise of trust. There's an old saying, things move at the speed of trust. Well, how could you possibly trust something on a platform if you don't even know if it's true? And so I think many of us in this industry over the last 10 years are going from a hands-off model where the internet's an immune system to realizing that's not really enough, that we have to take more responsibility for the stuff on our platform. And I think this has been a gradual, maybe too gradual transition for our industry. So that's the first thing. The second thing is we're launching a guest guarantee. And the guest guarantee basically means that we want to give peace of mind to guests, knowing that if you check into an Airbnb and it's not as described, that we will first try to make sure that we find a new Airbnb of equal or greater value. If we don't have it, we will give you 100% refund guaranteed. The third thing is we're creating a neighbor hotline. This has been a big requested feature. We've had a hotline in the past, but we need to go much further. So we're going to have a 24/7 neighbor hotline where any neighbor in any town, in any part of the world, 24/7 can call us. It'll be staffed by real people, not automated, and will be a rapid response team trained by police chiefs to make sure that we can deal in a timely manner with complaints. And the last thing is hopefully something that could have helped, it's hard to prevent every bad thing happening in 2 million, homes every night, but we're going to do extra manual reviews of every single high-risk reservation. So for example, if a single person books a 10-room home for that night in the city they live in, that is a very high-risk reservation. Well, that's the most extreme version, but there are less extreme versions. And we have a lot of technology protocols that can elevate things, but I think that ultimately technology has its limits, at least technology today. And so you have to put a lot more humans behind it in the review. I hope that all of this takes what has already been a pretty significant step forward for the company and does what I think is the most significant step forward in the trust design of our platform, probably since we started the company.
Okay, so let me unpack a lot of this, because you just talked about a lot of things here. But what I'm hearing underneath this is, and maybe I'm wrong, there's a bit of a model shift. This may be upending a little bit of the model, because for so very long, your service was based on trust, and the trust that other customers could do the reviewing, could do the verifying that the company could not, right? We just talked to Dara. We all see the stars on the drivers, and that's all, again, about trust. But it's us. It's this crowdsourcing of trust as opposed to a single entity that's actually then verifying what's going on. That's been an asset-light business. It's actually a very good business model, typically.
Yes.
I imagine to do the things you're talking about, to verify every single property, and you say this is going to happen now, literally in the next 12 months.
Well, we'll make sure that every single property is reviewed with the intention that 100% of things on Airbnb are verified, and there will be a day where there hopefully will be nothing that is ever not verified. Now, a nuance I will say is I think we're going to do this in collaboration with the community. 70% of guests who book on Airbnb do leave reviews, but they leave a 5-star review. We actually are going to now start working towards asking them specific questions. Was this address correct? Was this true? Was that true? And then we're going to use that with our team and our technology and try to triangulate information. And this is just a big step forward, a much larger investment for us.
Okay, but let's say I have never put my apartment on Airbnb, at least not yet. Yeah. Let's say I'm a first time customer in this respect, though I've been on the other end of it. How would you verify me on the first time that you're going to be seeing whether my apartment is really my apartment?
So this is something I've literally been holding the company together, been on calls day and night, try to get us to design this. So we're going to be coming back with more details. The team is working on these details now. What will probably happen is, in the near term, we're going to demarcate the difference between a listing that is verified and one that we don't know enough information about, and we're going to be very, very explicit that this is a new listing without enough data. Over time, with enough technology, hopefully, upon publishing, the vision would be eventually you could verify upon publishing. Now, some of our businesses, like Airbnb Experiences, Airbnb Plus, Airbnb Lux, we manually review and vet every single thing that is vetted. But this isn't the model that we started with on Airbnb. But I think this is the model that it's going towards. I think ultimately, most of these technology platforms, it's going to have to be a collaboration between the company and the community participating together. But what happened previously is they weren't talking enough. It wasn't active enough incentives with the community, and the companies maybe weren't hands-on enough.
Okay, so what is the cost of all of this going to be? Because having manual human beings ready 24/7 around the world to answer phone calls is expensive. Having individuals verifying all of this is expensive. This is a company, as you've indicated earlier this year, planning some form of a public listing. Yes. We can get into that in a minute. But in this conversation we were having with Dara and how investors are looking at growth versus profits, margins, I assume that you've been doing some modeling over the weekend, not just on how to do this, but what it's going to cost to do it.
Yes, I mean, it is a significant investment, but I'll say this. Airbnb, we raised $3.2 billion of capital from investors. We have more money in the bank than we've raised. The time is now to make these investments. And I ultimately think we are investing for the long term. This is inherently a mostly capital light business, and I think it makes complete sense. And ultimately, we're in the business of trust, so we have to make these investments to protect our users.
Does this change any of your planning in terms of timing for this listing for next year?
Absolutely not. And I ultimately think this is the very best possible outcome for our community with the changes we're making. And I think it will actually be a great outcome. I think it will provide a lot more peace of mind.
Speak to this idea of a public listing next year, because you were public. You put out a sentence, a one-sentence release, saying that this company intends to be public in 2020. Yes. Why? Most companies don't necessarily.
CEO Brian Chesky speaking with our Andrew Ross Sorkin on stage at the Deal Book conference right there, making some news, announcing that on the heels of that fatal shooting at a so-called party house in Northern California a couple days ago, that they're going to basically unveil a number of changes, including 100% verified hosts and listings that'll be reviewed, every listing on the site over the next year, 24/7 neighbor hotline, real people, rapid response team, extra manual review of high-risk reservations. But he's calling essentially a model shift, this combination of more collaboration between community, technology, and also more people within the company. In terms of the cost, significant investment. Also saying, Carl, that $3.2 billion is what the company's raised from investors, but they have more money in the bank than they've raised, which is why they're able to make these investments and basically engage in more verification.
Which, as Wapner points out on Twitter, has become the word for anything regarding social or digital internet, is verification. The trend toward anonymity is definitely coming to an end. When we come back,
guys,
Elizabeth. John, sorry.
Yeah, I got to get in here. I feel like part of the subtext to what Chesky was talking about, not just that tragic incident at the house party, but Vice's investigation showing that there was a bait and switch happening with certain properties where people would try to reserve a property and someone would push them into a different property, rundown property that wasn't what they reserved. There's threats to Airbnb's model on both sides. Unverified properties, and then people who aren't going to do with that property what they say they're going to do. Chesky spent a lot of time talking about making sure the property and the host are verified, which isn't so much about that tragic house party incident. It's about something else, which perhaps is an even bigger threat to their model if they don't fix it. He sounds determined to do that.
Yeah, something we investigated with our CNBC documentary last year as well. Certainly big developments ahead of Airbnb's expected IPO next year.
When we come back, Elizabeth Warren's response to our interview with Jamie Dimon from yesterday. Squawk Alley's back in a couple of minutes.
CNBC Technology Executive Council is sponsored by...
It's another Wednesday afternoon, yet another grey day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick to see spectacular coral reefs and white sand beaches. Fly from London Gatwick to Mauritius with British Airways, with flights and 7 nights hotel from just £949 per person. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Did you know BT's business broadband comes with an always connected guarantee?
Always connected? We can't guarantee that. Nobody can.
BT can.
No, it's impossible. What if a squirrel bites through your cable?
That's when the 4G backup kicks in.
4G backup?
Yup.
Well, squirrels can't bite through 4G.
Exactly.
BT Business Broadband with the always connected, squirrel-proof guarantee. BT, beyond limits. Subject to availability. T's and C's apply.
Hiya. Joe's booked us a surprise break to Butlins next year. Don't ask how I know. Someone left it open on the laptop, didn't they, Joe?
I was researching.
Bless him.
2020 is going to be amazing, though. They've got Diversity, Raksu, The Little Mermaid Panto, even the Harlem Globetrotters are going to be there.
Wow. We better not tell the boys yet. They won't sleep for a whole year.
For even lower prices on so many of our 2020 breaks to Butlins, book online now. There's so much included in the price.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Hey NFL fans, can't watch the game? Can't be there? We've got you covered. With TuneIn Premium, you can hear every NFL game live as it's happening, or catch it later on demand. Anytime, anywhere, all season long.
Pascal gobbles up the rebound and slams it down. Catch your favorite NBA team right here on TuneIn.
A step back, deep three is up and in.
Search NBA on TuneIn and hear all the action. The NBA lives on TuneIn.
You're going to see the market go through a little stumble here, although modest given the headlines out of Reuters reporting exclusively that the meeting between the president and Chinese President Xi could be delayed until December as discussions continue over the terms of the deal and the venue. This is quoting a senior White House official. They say it's still possible that a trade pact will not be reached, but that a deal is, in their view, still more likely than not, looking at potentially Europe as a likely venue as well. Switzerland and Sweden, among some of the sites they're considering. Iowa is not seen as a likely venue for any kind of signing. And then going on, Morgan, to say that China's push, as we now know, for some rollbacks on tariffs is not seen derailing progress toward a deal, but clearly net negative for the market and been a pretty tight range all day. We're down 50 points.
It is. And, it's going to be one to watch as we get more of these details and developments. And, of course, those next round of tariffs are supposed to go into place in the middle of December. So certainly the clock is now set and ticking even more so.
I'll keep our eyes on that. Look for any further reaction. Let's get to the CME and get the Santelli exchange. Morning, Rick.
Good morning, Carl, and thank you. I'd like to welcome my guest who is front and center during the bell ringing this morning at the New York Stock Exchange, Jerome Snyder. He is head of the short-term portfolio management team at PIMCO and the PIMCO Mint ETF, actively managed ETF, the largest, by the way, celebrated its 10th anniversary. Jerome, why is the Mint ETF so successful, and how is the active management going to change now that the yield curve has gotten a bit squirrely over the last 6 months?
Well, thanks, Rick. It's good to be with you here in New York on the stock exchange. And really what we did is launch the Mint ETF 10 years ago to really be a focal point for investors to focus on cash and capital preservation. And over the past 10 years, right after the financial crisis till now, we actually see a changing market environment. After the financial crisis, clearly things like credit risk were were on the forefront of people's mind. Then we have quantitative easing, and now we've actually have lower rates for longer. And that concept of lower rates is really imperiling savers along the way. So what we need to be thinking about is this balance, what we see between potential growth opportunities and continue to be a little bit more cautious as we enter into 2020 and 21 and beyond, where we still see the possibility of lower growth rates persisting. But really for investors and savers, it's all about capital preservation at this point in time. Seeking some modest income, staying again at the front end of the yield curve, considering that rates are relatively stable there right now.
You know, Jerome, many would say that the biggest bubble in history is the sovereign debt bubble and low and managed interest rates. We have seen some countries like Japan and the European Union rates start to move higher. Does that change your opinion on lower for longer?
Well, ultimately, to have that equation be resolved, you have to see growth move higher. At PIMCO, we think that the growth rate is going to bottom out at about 1%. And while we see perhaps the founding building blocks for some growth trajectory later in 2020 and maybe 21, it's still too early to be ramping up for taking credit risk, taking a more risk-appropriate posture at that point in time. But more importantly, be pivoting to the point that you can create optionality and take on those risks when we actually see a firmer foundation being built. We just don't see it at this point in time. So it's all about maintaining a high degree of liquidity, focusing on rates, and yes, to answer your question, in order to move rates higher, you ultimately have to see term premiums increase and, more importantly, growth rates begin to increase again. And it's just simply not in the cards right now. Although we've had a modest steepening of the yield curve, it's more normalized at this point in time. The reality is that the rates are going to relatively be bound by technical forces and the constant force that lower global growth rates remain consistently ceilinged right here below 2% at this current point in time. So there's a lot of challenges ahead for savers and risk takers alike.
Jerome, if investors are a little bit nervous about getting involved in interest rates, how would you change their mind with regard to your Mint ETF, the fact that it's actively managed, concentrating in the short end? What type of returns should investors expect, and how much risk will they be taking on? Your final thoughts.
Sure. Safety is on the forefront of everybody's mind. There's been over $400 billion moved into money market funds over the course of the past year, dominated by T-bill purchases. We also know that the Fed is going to be increasing their T-bill purchases as opposed to as a point to increase liquidity in the marketplace. The key determining factor here is that those yields will remain structurally lower for a significant period of time. Taking a step out and utilize the Mint ETF or other actively managed ETFs that can discern risk, take some modest credit risk, but most importantly, maintain diversification, allows investors to earn 2% and beyond yields in the combination of total return and income. So it's really about conceptually embracing an aspect of fixed income that has safety and, more importantly, a balanced risk and risk-adjusted returns for the foreseeable future.
Thank
that's
you,
what it's
Jerome.
about over the course of next year.
We're going to have to leave it there. We're going to have to leave it there. Thank you, and congratulations on the 10th anniversary of the Mint ETF at PIMCO.
Thank you, sir. Appreciate it.
Back to you.
All right, Rick, keep your eye on equities. Markets obviously dipping here on those headlines out of Reuters that we mentioned a moment ago. At the president and Xi, the meeting to sign a deal could be delayed until December. Kayla Tausche, we're looking for some color from you on this one.
Well, Carl, the administration is viewing December 15th as really any deadline here to have this signing. APEC was a convenient site where the two leaders were already preparing to be, but since the cancellation, they've consistently been searching for a new venue, and we're at odds over where exactly to hold this. The U.S. was proposing mainland U.S. locations like Iowa, which was its preference, as well as North Carolina, and China countered with Hawaii and Alaska with hopes of reviving a natural gas partnership with Alaska that its recently installed governor had scrapped in the last few months. So certainly China had its own priorities in selecting a location. The U.S. had its priorities, and they couldn't reach agreement, according to these Reuters headline. I do know that over the course of these discussions, as they've been trading possible ideas for these venues, whether it was Mar-a-Lago this spring or some of these U.S. locations in recent weeks, that President Trump has said, why not Switzerland? Switzerland is the most neutral location you could think of. And he said it with a laugh, but I'm told by administration officials that he was serious and that Switzerland has been one of the places that has been at least on a longer list, if not on a short list recently. Reuters reporting that Switzerland and Sweden are under consideration, with Europe now likely instead of Iowa, which the president said just less than a week ago was the likely location.
Well, Kayla, we know you've been following this very closely for us. Thanks for bringing us the latest. Kayla Tausche. Still to come, shares of Uber getting beat up in today's trade. Early Uber investor and the star of that movie, Ed Norton, talks that investment, the streaming wars, and his new film, Motherless Brooklyn. Next. Stay with us.
Can I find an investment firm that has a truly long-term view?
It's another Wednesday afternoon, yet another grey day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and relax with 365 beautiful beaches.
So yes, sir, what would you like to have?
Fly from London Gatwick to Antigua with British Airways from £223 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun with British Airways. Incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March. At Argos, get them the toys they're dreaming of this Christmas. Save 20% when you spend £20 or more on toys with code TOYS20, including top brands like Peppa Pig and Lego. Enjoy same-day home delivery 7 days a week. With Argos, you're good to go. Offer ends the 12th of November, subject to availability. Exclusions apply. Delivery conditions apply. Order by 6 p.m. 90% UK coverage.
London, switch to Vodafone, the UK's best mobile network, and Be Unlimited, because the best phones deserve the best network and our new unlimited data plans. The future is exciting. Ready? Vodafone.
Max download speeds apply to unlimited data. Best network as voted by readers of trusted reviews. Terms at vodafone.co.uk/unlimited.
Good. Here's a swing and a drive deep to right field. Looking up. Goodbye, baseball.
Between game-winning shots and walk-off homers, follow TuneIn on social media to discover the latest and greatest in live sports.
With the 24th pick in the 2019 NFL Draft.
From live reminders that the biggest MLB games are on the air, to recommendations of the best new sports talk shows and podcasts.
He's going to be fine. He's going to be good right away in 3 years.
Follow at TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn. College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
To the 10, all the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
I was rider 1, which technically means the second, because rider 0 was Travis's parents. Okay. But I was rider 1, and I took my surfboard and went surfing. As in New York.
Award-winning actor, filmmaker, entrepreneur Ed Norton with us here at Post 9 in the last hour. An early Uber investor. Rider number 1 after Travis Kalanick's parents, and said he met the founder over tacos before investing. Still has shares and still has constructive things to say about the efficiencies that ride-sharing brings.
And apparently was able to bring a surfboard in the car. It was quite a fascinating interview. I know one of the other reasons he was on was to talk about EDO and sort of this idea of bringing new technology, more targeted technology to TV and film as well. And I thought that was kind of a fascinating conversation, given the one we started the week off here on the show having around the role of data and micro-targeting and just how that's playing out on systems like Facebook.
Yep, plus fun to talk Fight Club, as always.
Oh.
Meantime, Faber, John, has this report that Xerox has made a formal offer on HP, cash and stock. I know you got some thoughts on this one.
I do. Fantastic reporting by Faber, as always. But the interesting thing for investors here is I see why you like this potential deal if you're Carl Icahn. If you're anybody else, though, some questions. Because from a business standpoint, combining Xerox with HPQ's printer business makes sense. But Xerox really needs the PC business for its free cash flow. I mean, they're going to generate close to $4 billion in free cash flow this year. A lot of that has to do with the negative cash conversion cycle in the personal systems business. But this looks potentially like one of those cases where you go in, you slash employees, you milk cash out of the business, and I'm not sure what the growth component of this deal is going to be. That's a question I would have if I were an investor, Carl.
Yeah, Faber's emphasis was on synergies, but we're going to have to watch for developments on that one.
Well, it seems like investors are bear hugging this bear hug of a proposed deal.
Yeah. Market's been patient with these trade headlines. Let's see where we get this afternoon. Let's get to the judge.
Carl, thanks so much. I'm Scott Wapner. Front and center this hour. Are the markets primed for a 7-week stock surge, or has your money run as far as it can this year? It is 12 noon. This is the halftime report. Now I do. Well, here we are. It's good to have you with us on this Wednesday. I don't know what they heard. I don't know what they didn't hear. Thankfully, I didn't say anything I wouldn't want them to hear. We have our investment committee today: Joe Terranova, Jim Leventhal, John Najarian, Courtney Gibson's the president of Loop Capital Markets, Bryn Talkington is managing partner at Requisite Capital Management. We can stop the music now, right?
I don't hear anything.
Yes.
Your music?
There we go. Thank you. Thank you. All right. Let's begin with a debate on where stocks are likely to go from here, whether it is possible to have that 7-week surge after already what's been a good year. The headline that the market stock have been reacting to, I guess in the last 10 minutes or so, Reuters exclusive, Trump-Xi meeting to sign U.S.-China trade deal could be delayed until December as discussions continue over terms and venue. Market didn't like that.
Yeah, but again,
a blip, but you know,
just a blip because we'd been basically going back and forth across break even all morning, Scott. I think what we're going to address here is what would be the driver other than that. That will be a driver if that is indeed signed, even if it is signed before December 15th, for instance. If it's signed after that, well, then we got other troubles. But if it's signed before then, no matter where it's signed, it's a good thing. The rest of it is really where are people going to put capital to work to make money into the year end.
So, Court, we come in saying, okay, can we have a 7-week stock surge, right? Between now and the end of the year, seasonally, it's generally a good time for stocks. This is the great overhang. Yeah. And the uncertainty that you get from a headline like this when you are trying to get this alleged phase 1 signed and no more tariffs put into play, does this ruin the chances of a 7-week surge?
Scott, we've had this discussion on a number of occasions. I mean, this is what's going to shift the market at the end of the day. I mean, it's the trade, it's the macro pieces that are really concerning to us right now. Yes, if this doesn't happen, stocks don't like that. We like certainty in the marketplace. And right now, we're not getting that. And here we have this whammy thrown in the middle of the day that the trade talks could go in a different direction. The market doesn't want to hear that. I mean, you have all these concerns. This market is somewhat fragile. I don't mean earnings are fragile necessarily, but I think the sentiment in the market right now is fragile.
Well,
and yes,
I'll play off that. Earnings aren't rock solid.
They're not rock solid, but at the end of the day, they're not terrible either. You are still seeing growth opportunities and value in this marketplace. You're seeing sectors that you want to see rotating into favor, and you're seeing names that you would expect to do well doing well. And so I'm not concerned about that. Right now, the biggest challenge that we're going to see and we're facing right now are some of these macro and political issues that are tainting this marketplace. And as we go into the fourth quarter, I mean, this market does tend to have a short memory. Last year, again, you start to see some light volume hitting the tape. And volume right now, you're seeing the market rallying, but it's rallying on greater volume than we've seen all year. The market, if the volumes start to dissipate a little bit, you're going to see more volatility, and these swings are going to be dramatic, and they're going to scare people.
Some, Joe, are, taking issue with the notion that, there was great progress to happen anyway on this trade thing. Evercore today, with a note that was being talked about, it's really an opinion piece. Their headline is China President Xi not coming to U.S. Factual, not exactly or necessarily, but based on their opinion, right? So they say, look, that's not going to happen. Richard Fisher with us yesterday said, don't expect a deal. Market's a little optimistic. Let's listen to Fisher. We can talk on the other side, put it all into context.
Are you playing the role of Fisher?
Maybe not.
How about music? Is this Friday the 13th already?
What are we over? Are we over 2?
We're struggling.
4.5 minutes in, we're over 2.
Yes, sir.
Go. Should we take a break? Should we go? Are we good? Okay, good. Good to know. Right. Richard Fisher says, don't expect a deal. Market's too optimistic.
So the president 3 hours ago tweeted about the stock market being at all-time highs. And at the end of the tweet, he said, spend your money well. If I were the president, I would pin that tweet to his profile, and I would remind himself constantly of that. What is important that he does nothing that disrupts the positive momentum that the consumer has going into the end of the year. And that's the critical component of that. So if the consumer feels good, if the consumer is able to turn on our show and see assets continuing to move in a positive direction, they're going out and spending, that is a critical time of the year. I think that's what's most important.
Okay, so Jim, you need what some say is a hoard of cash that's on the sidelines to come into the market, to push stocks higher, to find the right place in the stocks. Wall Street Journal says ready to boost stocks, investors multi-trillion dollar cash hoard, assets in money market accounts, decade high, bullish sign for some investors.
You know what? Thanks for bringing this up because you really just helped me. Here's the question. Here's the question that's been in my mind as we've been going through the early minutes of this show is, all right, where does the market go? Where do we want it to go? We all know what we want, which we haven't had, which is euphoria. We've talked about this before. We haven't had the euphoric phase of this rally, and we're waiting for it. Phase one, I don't think unlocks it. But as you get into the first half of 2020, a lot of things could come together to unlock that cash hoard, which is built up after quarter after quarter after quarter of outflows from equity funds. If you got some progress on phase two, if you got companies saying that they're going to spend on capital expenditures.
Jim, phase two, you're already getting, they're putting the cart before the horse. We can't even get phase one signed. You want phase two done?
Well, listen, phase one is going to get signed or else we're all in a lot of trouble. We're in a lot of trouble. That doesn't get signed, you're down 10% in the blink of an eye. Let's just assume that it's going to get done. And the reason is not because of what we think President Trump is going to do, but because you look at the Chinese, was it Vice Premier Liu or whether it's Mr. Hugh of the Global Times, they're all indicating this is going to get done. It may not be the presidents that sign it. It might be Lighthizer and Liu, but that's absolutely fine. I'm not going to expect the negative that is irrational for all of us to see.
I think that, if you go back, take a step back, looking probably about 900 days is when this started with trade. I think it was June 19th of 2017. Xi and Trump met at Mar-a-Lago to have 100-day trade talks. And now, close to 900 days later, here we are still talking. I think that if you listen to the White House, if you listen to Navarro, listen to Lighthizer, they've been really clear. There are 7 key components they want from China. I don't think any of those have to do with soybeans or trade deficits. I think as an investor, you have to take a step back, and if you're buying today on the hopes of a full-blown trade deal, I think you're going to be sorely disappointed. That being said, if you would have stepped to the sidelines, in June of 2017, you've missed really great returns. And so I think people need to get back to the business of investing and invest in really good companies. This volatility, if we get volatility where the trade talks don't go to mid-December, that's a great opportunity to step in.
Okay, so that's a good place to pivot. Talk about all the money that's on the sidelines, Doc. Mm-hmm. And if it does come in, where does it go? What are the kinds of stocks that are going to lead what could be a run into the end of the year? If you think that seasonally we're placed in a good spot, I want you to listen. I'm told our system's now working. Okay, cross your fingers as I'm doing this because I don't want to strike out. We've already done 0 for 2. Keith Meister yesterday. Okay, on Squawk Box, can the market go higher if the current stocks value leads over growth? Let's listen.
I'm of the view that we're not going to continue to go up led by cyclicals and financials and traditional value stocks. There's a reason why investors were crowded into growth stocks. The economic environment for the world hasn't changed. There's still lots of negative yielding debt and a view that global growth will be lower than average for a longer period of time. In that world, I think investors want to own companies that have real growth. And they're going to want to come back to businesses that are going to grow at 20+% regardless of whether GDP is 0 or 3. That's where everyone crowded.
Okay. That's the conversation of the moment. Value over growth.
It is.
Which stocks are going to lead you higher?
So the trajectory for the S&P 500 over the coming 45 days, in my view, will be determined by the steepening yield curve trade. Keep identifying JP Morgan as being incredibly critical to which way and telegraphing the market's going to go. JP Morgan higher once again today. Financials higher once again today. I think Keith's right, though. I think if there is going to be a sustainable rally beyond the next 45 days, a rally for 3 to 6 months, you need to see a return of growth outperformance. Let me give you a quick statistic.
Let me ask you a question, though, before you give me that. Why? Why?
Because of...
If the economy... Let's say people do believe the economy's bottomed, okay? Earnings have bottomed, and I'm talking globally. So things are getting a little bit better from an economic standpoint.
Correct.
Cyclical stocks.
Correct.
Value stocks would, industrials, energy, materials, things like that would pick up. Isn't that a good thing?
That's a great question, and it's about money flow. So you began the conversation by identifying the amount of capital that's sitting on the sidelines. I'm of the belief that capital does not come into the market. That capital is lost probably forever. So we're dealing with flows of capital on what's in the table. What are we witnessing right now? In the month of October, Scott, you had the biggest outflow from momentum as a strategy since 2012. It went into value, it went into energy, it went into quality type of names. So you're just moving the chips around on the table without the flow of capital coming in that's sitting on the sidelines. If that's not going to happen, you're going to have a return in the outperformance from the FANGs, from the growth names. Momentum is going to have to come back as a strategy to carry you forward beyond 45 days.
You guys agree or disagree with that?
Well, I think what's interesting also, I agree somewhat. I think it's really important to say, how do you define growth and how do you define value? If you pull up IVE, which is a good proxy of value, Apple is the #1 holding at over 9.5%. And so value is different today. So it's not just about financials and energy and industrials. It's also about good technology names. And so when you look at value doing so well, it's really important to know that Apple is a huge constituency inside of that value index.
But we're seeing small caps coming back, right? So I'm sorry, go ahead.
No, you go ahead.
No, go ahead.
You're seeing small caps coming back, and typically that means more of a risk-on trade. When you can start to see some of those small cap names coming and doing well, when you start to see value doing well, when you start to see financials coming back, I'd like to see a broad-based rally. I don't need 10, 12, 20% growth. If I'm going to do that, I'm going in the private equity markets, right? And we can talk about where those flows are going, because I do think some of that money on the sideline is diversifying outside of the public markets.
You kind of have a little bit of a more broad rally as you hit these new highs, right?
And
you got like 7 of 11 S&P sectors are within 3% of highs.
I love seeing it. And at Loop Capital, we only focus on institutional investors, a lot of large as well as small investors. And we're seeing buying 4-to-1 into this rally right now. 4-to-1 across staples, energy, and materials, right? And I mean, that's a big deal. And it's saying a lot to me right now as we look at that. I'm not saying they're getting out of growth, because you need growth in a solid economy. And I'm 100% in agreement with you there. But the fact that we're seeing those other sectors coming back into the fold here is a positive sign. The only thing that takes us out of that is touching that consumer sentiment and someone messing with that consumer sentiment right now. If we can get that out of the way, the end of the year looks good.
Yeah, last year, I was just looking at these numbers basically year over year. It's 11 months back, Scott, but we were up to a 49% chance of recession last December. And the reason, of course, was exactly what Courtney just spoke to, and that is consumer sentiment was falling apart. The market was tumbling, and consumers were realizing that was hitting them in the pocketbook as well, but the sentiment was just miserable. It's the opposite this year, and the chance of recession keeps dropping by the day. So I would say, as long as that doesn't get interrupted, to Joe's point about the president pinning his tweet, that'd be a very positive thing.
The surge in cyclicals and value stocks is predicated, and this is inherent in what Mr. Meister said, on the belief that the cycle is turning up, that PMIs across the world have bottomed. And that will be the case unless we muck up something like trade, like Brexit. Let's assume that it doesn't go badly. Right now, you've seen rail car loadings, truck orders just fall off a cliff. As that comes back, so come back the industrials, so come back energy, so come back basic materials. But the punchline is, you have to have the economic cycle resume growth. Every indication is that that's what's going to happen unless we create a self-inflicted wound on trade to halt it in its tracks.
The price discovery on that, though, Jim, is reflected in where yields are. And
I agree.
You have to. So you have so far quarter to date, you have the S&P performing at 3%, and you have the Nikkei, the DAX, emerging markets doubling that performance. Why? Because it's on this backup in yields. Now, Tell me that the backup in yields is going to continue further. A German 10-year is going to go positive. A U.S. 10-year is going to go 2%, and say, okay, fine. Stay with the value names. Stay with the financial names. I don't see that type of environment. I don't see the growth acceleration that others are suggesting.
Predictions are like 1%.
Exactly.
For the fourth quarter.
It's still a 1.5%, maybe 2% economy.
We hope.
That's why in that environment, you have to pay that premium for growth. Need growth to come back at some point.
Where do y'all come down right now on bank stocks? RBC says they need to be owned. Love them?
They do.
They do.
Been talking about that.
The trajectory on the 10-year is positive. The trajectory on the short end of the curve is down. All right, the yield curve is steeper than it was by a lot 2 months ago, and it's continuing to steepen.
We may just get a reality slap in the face on where growth really is, though.
Yeah, but okay, that's fine. But we keep comparing the fourth quarter of last year. At the beginning of the fourth quarter last year, where was the 10-year? It was 3.25%, right? Remember Jamie Dimon saying things like prepare for 4.5%? We're still at 1.86. I'm sure it's right there. Okay, 1.82. Excuse me. That's so far below where we were a year ago. There's a lot of room for rates to move up along the curve and for banks to strengthen with it. A lot of room.
And to Bryn's point about, she said Apple, number one stock, over 8%, I think, in the IVE, the value part of the S&P 500. There are two big banks in there, Scott. JP Morgan is number 2 on that list, and I think Bank America is number 4. Now, I don't own either one right now, so shame on me. Those are outperforming like
You own
crazy.
Morgan Stanley calls.
I do own Morgan Stanley.
Isn't that your first sort of play in the banks in an awfully long time?
Yep.
Why Morgan Stanley calls versus others?
I was in this one in particular because of the trade. I don't mean as a trade for me. I mean in terms of trade. As rates go up, their margin interest goes up pretty substantially because, of course, like any broker, they're a lender. And you don't have to fill out a lot of paperwork. Once you have that margin agreement, you can borrow up to 50%. And if some of that money is going from money market funds, Scott, that we talked about top of the show, $3.4 trillion collectively on the sidelines. Money markets have added $1 trillion. I mean, this is just crazy amounts of money. And if some of that's coming back into the market and some of these people use leverage, that's good for Morgan Stanley.
You don't own any of the money center banks at all?
I don't own any of the money.
You own some private equity? You don't own any? No JP Morgan, no Citi, no Goldman, no Morgan Stanley?
I don't own any of the money center banks right now. However, if there were ones that I liked, I would want the ones that have access and have an asset management business in them. So when you think about a JP Morgan, when you think about a Morgan Stanley with Morgan Stanley Investment Management or JP Morgan Investment Management, I like the diversification of the money center banks into asset management that has exposure to alternatives. Now, I like the pure play on it, and obviously there's a reason for that. So I'm in financials, and I got exposure to financials in my personal portfolio, but it is via the asset management firms, particularly those that have exposure to alternatives, just because of money flows.
And I think to echo that as well, I mean, we own Goldman and have been writing calls against that, pretty much all year because it's gone between about 200 and 220 back and forth. Yep. Ultimately, it will break out. What's interesting about Goldman is, they are reinventing themselves. Goldman today is not the Goldman 20 years ago.
Solomon is changing it up.
Exactly. Yeah. They have a really robust asset management business. They also consolidated their private equity business, which makes them, I think, the third largest player underneath. It's like Blackstone, KKR and Goldman. And so we like that optionality. And obviously with Marcus, what they're doing with the consumer. If we don't have a repeat of August, when the world was like, we're all going to negative rates, and you actually have, the 10-year go, let's say 2%, or just somewhat of a Goldilocks, I think there's a lot of upside potential for these banks that have had a lot of pressure because of the negative rates.
I've advocated and owned these banks. I've told you JP Morgan's the most important stock right now in the S&P 500, but it's USB, it's Wells Fargo, it's American Express. KKR, Senator Elizabeth Warren single-handedly took the price of KKR from 30 down to 24. It's right back towards 30 once again. Tremendous recovery to Courtney's point on the private equity side. But I think it's also marrying not only the recovery in yields, it is also the fact that we are seeing strong loan growth, both from commercial, industrial, and residential. And the consumer is strong, and it's contributing to the bank's ability to grow their revenue. Housing very quietly, making that comeback. Absolutely. A name like USB, Wells Fargo, they're going to benefit from that.
All right, let me ask you this. So you mentioned Elizabeth Warren, the impact she had on KKR stock, in your opinion. and the fact that it's come back the way it has.
Yes.
So do we think, because everybody seemingly is opining on this now, from Paul Tudor Jones and others yesterday, I'm going to play you a soundbite in a second of somebody else, a well-known guest on our show who's given you a trade in that regard as well. Do we think the fears about Elizabeth Warren, even as the nominee, are overblown about what the impact on the stock market is going to be? Or are they legit? Totally justified.
It's legitimate if she is the nominee, but I think the bigger question is, why are we worrying about this now? We haven't even had the first caucus or primary, whatever New Hampshire and Iowa are called. It's so far down the road.
You know where the market is, how the market acts, dude, right?
Yeah, 6 to 9 months.
Starts worrying about like all this stuff way before we even get those answers.
But,
and it's usually been wrong,
not to be saucy,
last couple
not to
of
be
elections.
saucy, but dude, the stock market's at an all-time high. Look, by May, if she is really the front runner, we got a serious problem on our hands. But no, everybody's looking at this. Everybody is right, whether it's Paul Tudor Jones, I think who you're leading to. I won't use the name, but he was on our show a couple of days ago.
No, he was on. Let's do it right now. Let's do it right now.
Yeah.
Because Leslie Picker spoke with Mark Lazary last night. Lazary's going to be with us next week. We'll get his thoughts on a more granular basis next week. But here's what he said about what he thinks one of the best trades in the market will be.
I think the best trade out there today is that you should go short the market the minute it's clear that Warren's the nominee. I mean, I don't know if it goes down 25.
The nominee or
the nominee?
The president?
No, the nominee. Because that's when the market's going to realize there's a real possibility. Today, that's being discounted very, very heavily. I don't know if it goes down 25%, but it's definitely going down 10 to 25. So I don't know what the number is, but it's not going up.
That coming from Mark Lazary, one of the best known Democrats
I was going
on
to
Wall
say,
Street.
Mark Lazary, would be admitting this, of course, on air. He is a Democrat. So for him to come out and say that, obviously he believes it. Mark's a pretty forthright guy. To Jim's point, it won't be clear for months and months that she would be the nominee if she is.
But if the polls start to show a separation between herself and Vice President Biden, then the market starts to game it a little more seriously. And that's kind of where we are now.
You bet it would, because of the wealth tax, Scott, because of the health care that she hasn't explained how she's going to pay for the $52 trillion or whatever without taxing the middle class. We all know you can sort of do it if you add them to the mix. But I think people would be very nervous in the markets if she was the nominee.
I mean, history tells us that when you get these types of, we'll say, potential sell-offs, that is the opportunity to invest back into stocks. And so I think that saying that she's the nominee to being the actual president, we actually have a legislative branch as well. And so we have a whole process. I think it's a good opportunity to take a step back and say, hey, like, for example, you said with KKR, Blackstone and KKR both sold off when she started coming up in the polls. That's a good opportunity to own those companies.
Absolutely.
Because ultimately people expect either the best of times or worst of times, and the reality is that rarely even happens.
Well, thanks for that civic lesson, by the way, because it is incredibly important.
Yeah.
I mean,
we got the lesson in November of 2016, right? And everybody thought you had to run for the hills with President Trump's election, and next thing you know, the stock market has an incredible run from election day.
There's a strong comparison, because the belief was that the market would fall because of President Trump protectionist mentality, and that he would go after the Chinese using tariffs. Well, guess what he did? He used tariffs to go after the Chinese, and the market rallied. I think the surprise is that Senator Warren didn't moderate her persona in response to Leon Cooperman's letter. In fact, she pushed the chips to the center of the table yesterday.
Why would she wouldn't do that now?
Well, she
wouldn't do that now.
The belief from many who say, well, don't worry about Senator Elizabeth Warren becoming President Elizabeth Warren, it's not going to disrupt the market that much, is because they believe potentially when you become president, you moderate some of the policy.
Becoming president and trying to become the nominee and satisfying a base that doesn't want her to moderate off any of the positions that she is known for. Those are two entirely different things under two entirely different timeframes.
Not as an investor. Completely not as an investor.
She's not going to moderate her positions on anything. I'm not saying Cooperman wrote a letter to her.
But I didn't say that she was going to. What I said was there was an opportunity for her to do that. Yesterday, she pushed the chips to the center of the table.
Right, you didn't say opportunity. You just said she didn't do that.
So Jamie,
I'm glad you're clarifying that now.
So Jamie Dimon yesterday, in his interview with Wilf, Senator Warren responded to that. So there's been no moderation in what her feelings towards Wall Street are going to be. So I don't.
There's not going to be a moderation of her feelings until
right now. There is no incentive to do
maybe
so.
Never. Maybe never. It sure as hell is not going to come anytime soon.
And in the
all right? So I don't know why we're talking about that.
Because in the environment of that there is no moderation at any point, then Mark Lazary, then Paul Tudor Jones, and everyone's correct that you're going to see a significant decline in the marketplace. But I don't suspect, and I think the market right now is giving you that evidence, I don't suspect that people believe she's going to carry the rhetoric she's got right now into the Oval Office if she ever was elected president. People believe, the market people believe that she'll change. Otherwise, the market would be down significantly right now.
I think also we missed the fact that, opinion. There is a great body of opinion out there that says that if she's the nominee, it actually helps Trump.
Trump gets reelected.
So, it might work the other way.
Like it, that's what ends up happening. But I don't think I don't know if the market cares either way, because I agree with you in that they can't really get a ton done. I think the bottom line is the certainty. And right now, the flux is what the challenge would be. Just sort of like with Trump at the end of the day, when people thought he was going to, when he got the nod and it was all late in the night, I was here in New York and everything was all going crazy, and you see the market dropping 800 points and then the next morning you're up the same amount. The issue was people didn't expect it. If the market doesn't have a clear path, that's when it gets nervous, and that's when it starts acting, for lack of a better word, crazy. It's not a matter of who it is, because I think everyone kind of knows, whether you think it's going to be a moderate push kind of towards the center that everyone's going to get to. The bottom line is you can't get it done without kind of giving a little bit here and there. No one on one extreme or the other can win in this country at this point. And so folks got to deal with that.
Okay. Here's what else is coming up on the halftime report.
The state of the consumer. Dick's Sporting Goods shares up 20% in the last 3 months. But is the run overdone? Our desk debates it in Call of the Day. Plus, don't miss John Nigerian's latest trades and unusual activity. How he's making bets based on moves in the options market. Halftime report with Scott Wapner and the traders is back in 2 minutes.
It's another Wednesday afternoon, yet another grey day. So ditch the British winter and chase the sun across the globe with British Airways from London Gatwick and explore tropical rainforests. Fly from London Gatwick to Costa Rica with British Airways from £218 each way based on a return fare. Don't miss out. Book by November the 12th at ba.com/wintersun. With British Airways, incredible is within reach. Booking fees and conditions may apply. Limited availability. Selected flights in March.
Fancy trading up this weekend? Get £4,100 scrappage or part exchange value on a new Grandland X with 4.9% APR representative, plus a further £600 at participating Vauxhall retailers from the 8th to the 11th of November. Visit your Vauxhall retailer now or search Vauxhall Trade Up. T's and C's apply. Trade-in car must be registered in your name for at least 90 days. Conditional sale and personal contract purchase only. Subject to status 18+ Vauxhall Finance. Other deposit contributions may be available if you don't have a trade-in vehicle. Ends 26th of November.
College football is live on TuneIn. Listen for free to games from more than 140 schools all season long.
All the way to the checkerboard.
This Saturday at 3:30 p.m. Eastern, number 1 LSU is taking on number 2 Alabama with a battle between LSU's quarterback Joe Burrow and Alabama's QB Tua Tagovailoa. Both are potential number 1 picks in the NFL Draft. Listen to every call and every game of your school all season long for free on TuneIn. Just search college to listen today.
On this week's On the Media,
we really need to start framing this differently.
The way we report the story of the California wildfires, like blaming the power company, obscures the underlying structural problems.
I despair that our contemporary politics can in any way deal with the challenge that this century presents us.
Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast from WNYC Studios on TuneIn today.
In case you didn't know, TuneIn lets you listen to the same radio stations you pick up on your home or car radio, except you can hear them from anywhere. If you want to find a station from somewhere else in the world, navigate to the By Location section under Browse. Keep exploring with TuneIn.
Hi, everybody. Here we are in the CNBC control room. This is where it all comes in, including and especially your questions. Go to cnbc.com/halftime. Ask us a question. We'll answer it on the air.
Go to cnbc.com/halftime or get us on Twitter with the hashtag AskHalftime.
Welcome back, everybody. I'm Sue Herrera. Here's your CNBC News Update at this hour. Chairman Adam Schiff announcing that the House Permanent Select Committee on Intelligence will hold its first open hearing as part of the impeachment inquiry. That will happen on November 13th.
We will begin our open hearings in the impeachment inquiry next week. We will be beginning with the testimony of Ambassador Taylor and Ambassador Kent on Wednesday, and we will have Ambassador Yovanovitch testify on Friday. These will be the first of the open hearings.
A young man from a Palestinian refugee camp stabbing 8 people, including 4 tourists and their tour guide, at a popular archaeological site in northern Jordan. 3 other Jordanians, including a policeman, were also hurt before the attacker was arrested. The massive burn scar from California's Kincade fire can be seen from space. This image, taken Sunday morning, was captured by a NASA satellite. The burned area appears dark gray, while hot spots appear as yellow dots. The fire, which is now 84% contained, has burned nearly 78,000 acres and 374 structures. You are up to date. That's the news update, Scott. I'll send it back to you.
Sue, appreciate it very much. Thank you. All right, after rallying more than 30% this year, Raymond James thinks that Dick's Sporting Goods has gotten ahead of itself. Valuation is just too high, they say. The analyst resumes coverage of DKS today. Underperform is the rating. That's a sell, right, Doc?
It is, and it's kind of surprising, Scott, because I've got Goldman Sachs, UBS, Stifel, all moving targets up on this name, not moving targets down. So, kudos to Ray J for, fighting that trend. I think the others are going to be right, and Ray J is going to be wrong on this call. But I think obviously the market will tell us, as it usually does, by either endorsing this with buying or selling.
I would guess that the analyst is leaving himself room to upgrade this in the near future.
Yep.
Look, the retail apocalypse is real, but this is one company that seems to be surviving it. I mean, if you want to knock that it's had a bit of a recovery, that's fair, but the valuation is forgiving, and the sector of sports apparel and sports equipment is one that's, it's not immune to online. It's certainly not immune, but it's more protected than, let's say, apparel is to online consumption.
There's 2 components to this that work against Dick's, and that's number 1, the margin compression. And the margin compression story has been significant as you've had the transformation towards digital, which is now 70% of its sales. So in gaining momentum in digital, you're losing some of the margin power that you previously had. Hard lines and equipment, which is 43% of Dick's business, has also struggled. We had challenges, not enough positive momentum in terms of apparel and footwear. So in March, they're going to give the full year guidance. I agree with John. I think it's late for this note. I think this is a stock that probably trades more towards 45. But
Wait. You think it's late for the note?
I think it's late for the
stock's
note.
had this run. I mean, why would you want them to do it earlier and miss part of the run?
Well, let me correct myself. When I say it's late for the note, I'm incorrect in saying that. What I should be saying is I disagree completely. There's further upside.
And I agree. Going into the holiday season, season.
I'm not trying to get you. Trying to get you. Looking for clarity. Right. That's all.
But I think going into the holiday season, if we have a milder winter, I don't follow Dick's Sporting Goods. We don't at Loop Capital, but we are somewhat bullish, I should say. Let me clear that back. Somewhat bullish on retail going into this next holiday season, and I think Dick's should hopefully benefit from that, especially you get some milder weather. Jim's going to go out and buy some baseball mitts and hang out for the winter time.
I really like hearing this, okay? There are very few firms that are willing to take a stand